Investing is one of the most important financial activities in your lifetime. It's also one of the most intimidating. The good news is that investing isn't as difficult as it seems. There are a variety of different investment options available to you so long as you understand what they are, how they work, and why you should invest in them. Investing basics can seem overwhelming, but with a little knowledge and a lot of practice, anyone can start investing successfully. You don't need to be an expert financial advisor to do it either. Even though it takes time and patience for sure, it will eventually pay off in the long run if you stick with it. Whether you're looking to save for your child's education or your own retirement, investing money is the best way to achieve that goal. In this video, we will discuss some of the most common types of investments and briefly explain their advantages and disadvantages. How to invest. Investing is the act of putting your money into an asset and earning a profit from it. There are many different ways to invest your money. You can put your money in stocks, bonds, real estate, or mutual funds. Some people prefer to keep their money in different kinds of assets like stocks because they are looking for a return on their investment. If you are trying to figure out how to start investing, you will need to figure out what kind of investment you want to make. Once you know what to invest in, you can find a reliable broker or fund manager to help you do it. What is an investment? An investment is simply putting your money in an asset that you hope will increase in value over time. There are many different types of investments. Each one has pros and cons. Let's break them down. Real Estate Investment Trust, REIT, a type of fund that invests in real estate. A real estate investment trust is basically a way of investing in real estate that is similar to investing in stocks. There are now many different types of real estate investments like commercial real estate investment trusts and even investment trusts that invest in residential real estate. The major advantage of a real estate investment trust is that it allows you to diversify your risk and invest in a wide range of real estate types. Real estate. This is when you purchase a property and then either rent it out or put it up for sale. You can use this money to make a profit by buying properties that are either for sale or renting them out. Real estate is a great long-term investment because you can actually see your money grow. However, it is risky and not recommended for beginners. Real estate investing is a very complicated field. You don't want to end up losing your money due to poor real estate decisions. Stocks. A stock is a piece of ownership in a company. The two main types of stocks are common stocks and preferred stocks. Preferred stocks are usually issued by large companies as investment tools. They offer better returns than common stocks but have a higher risk than U.S. Treasury bills. Common stocks are typically owned by everyone. It's the preferred type of stock because it has limited ownership. Because there is no limit to how many shares you can own in a company, you have a larger percentage of the ownership in that company. One major advantage of owning stocks is that you are able to let your money earn money through a simple investment. Stocks are risky, but they are also very profitable. The only downside is that it can take time for them to make money for you. Bonds. A bond is a loan between a government and a company. The company takes the debt out at a set interest rate. The government gives the company the right to take repayment from the bondholder at a specified time. Unlike stocks, which are bought and sold, bonds are usually held by companies. They are typically reserved for long-term investments. Investing in bonds is a safe way to make a profit. The one major drawback is that you will never make as much money as if you invest in stocks. Another downside is that you will never be able to take as big of a risk because you are locking your money away for a long period of time. Mutual funds. A mutual fund is an investment pool that pools money from many different investors. The fund manager invests the money in a variety of different types of assets and invests the money in a way that is beneficial for the fund's investors. Mutual funds are a great way to diversify your investments. The big downside of mutual funds is that they are open-ended investment products that are very hard to exit. It can be very hard to get your money back out of a mutual fund once you put it in. Mutual funds are a great way to invest, but they are not a great way to withdraw your money. A mutual fund is usually an open-ended investment product. This means you might have to wait years before you get your money back out. The good news is that with a little research and time, it is possible to start your own investment portfolio. Exchange-traded funds, ETF. An exchange-traded fund, ETF, is like a stock that trades on an exchange like a stock. ETFs are a type of mutual fund that buy a basket of assets and then trade on the stock market like a stock. ETFs are similar to stocks, but they aren't as risky since they are a regulated product. You can buy and sell ETFs just like stocks. They are also typically a very low-cost investment product. There are also index funds that track a specific index like the S&P 500 or the Russell 2000. These are very low-cost investment products that are similar to an ETF. There are many different types of investment products available to you. It's important to understand the differences and make sure you pick the one that is best for you. Summary. All investments have risks, but there are also many different ways to get a return on your investment. Stocks are risky but can be very profitable. Mutual funds are a safer option. Bond funds are safe but don't have a lot of return. Real estate sometimes has higher returns but is very risky. Real estate investment trusts are a safer option than just buying real estate. Exchange-traded funds are a safer option than just buying stocks. Investing is a great way to make money. But it's important to do your research and choose the right investment for you.